Welcome to The Explainer. We're here to break down complex stories into clear, dynamic presentations. So how can a single day's news actually reveal an entire country's economic strategy? Well, let's dive into that. We're going to look at one specific day, Sunday, December 7th, 2025. On this day, three things happened that on the surface look totally unrelated, but when you put them together, wow, they paint this surprisingly clear picture of where India's economy is heading. So here's what we're going to do. We're going to connect the dots between a major government crackdown on an airline, a pretty big shakeup in the stock market, and a huge foreign investment deal. Let's get into it.
All right, first up, let's get into the most dramatic story of the day, no question. We're talking about the government's pretty unprecedented response to a travel crisis that left thousands, and I mean thousands of passengers completely stranded. You can just feel the tone from the government here. It was totally uncompromising. I mean, this wasn't a friendly suggestion, right? This was a line in the sand. It set the stage for a really powerful, decisive move into the private sector.
And what kicked this all off? The sheer scale of the failure was just staggering. We're talking about more than 500 flights canceled by just one airline, IndiGo, which is India's largest. You can just imagine the chaos this created at airports all over the country. It was a complete mess.
So the government didn't just wag its finger. Nope. They brought out the hammer. They forced immediate and pretty significant financial consequences. IndiGo was ordered to process 610 crore rupees. That's around 73 million US dollars. And get this, they had to do it by 8 p.m. that same day. Talk about a deadline.
And you can see here, their approach was really comprehensive. It wasn't just about the money. Step 1, sure, get the refunds out. But then step 2, deal with the baggage nightmare. Step 3, set up proper support for passengers. And step 4, and this is a big one, they slapped on fare caps to stop other airlines from price gouging. They covered all the bases.
But here's the real kicker. This whole thing went way beyond just passenger refunds. It was a massive signal about corporate accountability. The regulator didn't just talk to some mid-level manager. They went straight for the top, the CEO and the COO. The message was crystal clear. This collapse wasn't just an operational glitch, it was a failure of leadership.
Okay, so we've seen them crack down on one company. Now let's switch gears and see how this theme of intervention gets even bigger. We're talking about rewriting the rules for the entire financial market. And yep, on that very same day, regulators were putting the final touches on a major reform that was going to start the very next morning.
So what was this big change? It was something called a pre-open session for the huge futures and options market, the F&O market. The idea is pretty simple. For 15 minutes before the chaos of the opening bell, there's a special auction. Its whole job is to figure out a fair opening price and hopefully tame some of that crazy volatility we always see first thing in the morning. So here's how it works. You can see it on the timeline. At 9 a.m., traders start putting in their orders. They get 8 minutes. Then, the system does its magic, matches everything up, and calculates one single opening price. There's a quick buffer period, and then at 9:15, boom, continuous trading starts. It's a total redesign of those critical first 15 minutes. So really, the whole point was to change the game at the opening. You go from what was basically a chaotic sprint at 9:15 a.m. to this much more orderly, transparent process. Instead of a massive jerky reaction to whatever news broke overnight, the new system is built to find a stable price before the market really opens. It's all about reducing that initial shock and risk for everybody. All right, so we've covered the crackdown and the market reform. Now for the third piece of the puzzle. Let's shift away from rules and regulations and look at the government's long-term vision for growth. Because while all this other stuff was going on, a massive investment deal was being finalized. And this one signals a huge bet on India's manufacturing future. $2 billion. That's the number. And that single number is a massive vote of confidence in India's goals. We're talking about Hyundai, the South Korean shipbuilding giant, committing to a $2 billion investment to build its first ever shipyard in India. That's a huge injection of foreign cash right into the country's core infrastructure. And this table really breaks down why this deal is such a big deal. Look, it's not just some foreign companies setting up a factory. You've got a global industry leader, Hyundai, basically giving a thumbs up to India's shipbuilding potential. They picked a perfect spot for it, and, crucially, it lines up perfectly with a big national policy, the Maritime Amrit Kaal Vision 2047. The goal there? To make India a top 5 shipbuilding nation.
This investment is a huge step towards that.
But again, think bigger. This isn't just about one shipyard. It's the anchor for a whole industrial ecosystem. You add this $2 billion to the 30,000 crore rupees coming from domestic companies, and suddenly you have a massive maritime hub taking shape. We're talking an estimated 55,000 jobs in the region. This is exactly what the Make in India idea is all about, in action.
Okay, let's step back for a second and connect all these dots. We've got the airline crackdown, the stock market reform, and this huge investment. They seem separate, right? But what if they're not? What if they're all part of the exact same playbook?
Yet these weren't just random things that happened on the same day. These were deliberate moves that, together, show a really clear three-part strategy. On one single day, the government basically showed its hand. It can be the strict regulator, it can be the systemic reformer, and it can be the strategic investor, all at the same time.
So what does all this mean for businesses and investors? Well, it's pretty clear a new landscape is taking shape. You've got new risks, for sure. If you're an executive, you're now directly on the hook for failures. If you're a trader, you have to change your entire opening strategy. But there's also this huge policy-backed opportunity if you're willing to align with where the government is trying to go long-term.
And that's really the bottom line. When you see them act so decisively on all three of these fronts at once, this broader economic blueprint just snaps into focus. The message couldn't be clearer. We're going to enforce accountability, we're going to stabilize our markets, and we are going to attract and support the big strategic investments that build the nation.
Which really leaves us with one big question, doesn't it? When a government acts as a regulator, a reformer, and an investor all in one day, what does that signal for the future? It definitely points to a more hands-on approach, and it raises some really interesting questions about that classic balancing act between government intervention and the free market, especially in an economy growing this fast.
So there you have it, how one very busy day can reveal a nation's entire economic game plan. We hope this helped you see that bigger picture. If it did, hey, do us a favor and like, share, and subscribe. And definitely let us know what you think in the comments. We'd love to hear from you.